Finally, this Saturday afternoon, India moved yet another step forward towards the rollout of what is India's most ambitious tax reform, the GST. The GST Council, a federal body of centre and states, sealed the tax rate for most goods and services. Speaking about services, rate of 5, 12, 18 and 28% have been finalized for services in line with those applying to the goods. It is a big departure from the current regime where most services are taxed at 15%, including cess. And late last night, the CBEC uploaded on their website the fitment of rates of service taking into account the input tax credit that would be available to them. Sapna Das joins us with more details on that. Sapna, what's the latest?
So the sense that we're getting from the government very clearly is that even if the effective rate, even if the rate slabs for some of the services, say for example insurance, banking services, telecom, I mean it may have moved into 18% slab. But the message from the government is very clear that since the input tax credit mechanism is going to be available, industry should make all effort to pass on the tax benefit to the consumers. A. B. The Revenue Secretary is also very clear on the fact that if this is not done, basically the government will be keeping an eye on the fact that the benefit is passed on, and they would like to look into this matter at some point in time. The third aspect is this, that even the anti-profiteering mechanism on that front, it's not ready so far. It's just in law. Probably in the next 3 to 6 months, something should be up and running. If the July 1 timeline is what the government is sticking to, and that's what the clear indication is as of now. Basically, they are indicating that at least if the tax rates don't come down, the incidence doesn't come down in terms of pricing, industry should try and make sure that the incidence remains unchanged at the current level. So basically the effective rate might come down to somewhere around 15-odd%, at least for the 18% bracket for some of the services very quickly. The exemption list is also pretty interesting. They have tried and maintained it at the same level. Healthcare and education is definitely out. And good news in terms of the 5% tax bracket, your airfare tickets for the economy class have come down by 1%. From 6%, the incidence comes down to 5% now. Ola, Uber, all in the 5% bracket. So the tax incidence on that front remains unchanged.
Thank you, Sapna, for that. Prateek Jain of PwC joins us now. Prateek, the schedule of rates is out with multiple slabs for services as well. Do you see that will make the process more complicated given there was only one rate currently?
Yes, so we were expecting two rates, one at 18%, which is a standard rate, to replace the current 15%, and then maybe one lower slab for certain services which currently enjoy abatement, like real estate and airlines, etc. But what the government has done is they have chosen the same rate slabs as goods, so it is 0, 5, 12, 18, and 28. And whenever you have multiple slabs, A, it becomes more complicated. B, it moves you away from a classic GST system, which is a simple tax system at a single rate, and a more transparent tax system, and it leads to litigation. So yes, in that sense, it is a departure from what industry understood and always was hoping for. The positive that I see is that the 28% category and a 5% category is kept at a bare minimum level. There's only few services that attract those rates. And one would hope that as we go along, the government would move to a dual kind of a rate structure on services, because today it is, as you said, 15% on most services. And we don't think that there was any particular reason for the government to look at multiple rate structure here.
Okay, so a bit of disappointment coming in due to the multiple tax slabs, but the schedule of input tax credits, exemption list and the reverse charge is also out. Any surprises in those front?
No, I mean, not really. As far as reverse charge is concerned, it's basically a mechanism to ensure that the recipient of services pay tax. So it's either done where the service providers are largely unorganized, like goods transportation, or in specific cases like advocates and few other cases. So those largely remain the same. As far as input taxes are concerned, again, no major change, except the fact that, which happened a few days ago, that there is a specific restriction has been brought in for telecom towers, which obviously comes as a bit of an unpleasant surprise to the telecom sector. But other than that, no major surprises as far as reverse charge and telecom is concerned. And the input taxes are concerned.
Okay, you mentioned about the telecom industry. The telecom industry was earlier unhappy with the 18% rate, but now we understand that there will be a 3% input tax credit, making the effective tax rate at 15%. Do you think the industry will cheer the input tax credit now?
Yes. So they would get some input tax credit. Now, whether it is 3% or less than that, of course, depends on how do you sort of what is their procurement pattern and things like that. But basically, today also telecom companies get credit of services that they procure. The only thing which changes now is that whatever telecom equipment that they buy, earlier they used to pay VAT, which was not allowed as a credit. Now it will be allowed as a credit. So there will be some benefit which will be there. Bear in mind that for telecom towers, there is a specific restriction for credit, for which they actually get the credit now. So they will be a little worse off there. But that said, yes, there would be some input tax credit, and I'm sure that industry would be passing it on to the consumers. But from a consumer standpoint, on the invoice, they will see 18% as opposed to 15% today. So they will be a little disappointed, but the net incidence or increment may not be 3%. It might be a little less because of this input credit that we're talking about.
Okay, thank you, Prateek, for joining us. But